at exercise 5. Okay, so exercise 5, we're going to identify, we've got a list of transactions, and we're going to identify what kind of adjusting entry would be needed from the following 4 types of adjusting entries. So we've got prepaid expense, we've got unearned revenue, we've got accrued expense, and we've got accrued revenue. All right. So let's look at the April 1st transaction. So April 1 says we paid 6 months of rent for $4,800. Okay. So looking at this, what type of adjusting entry are we going to need at the end of the period? Well, for that one, we've paid 6 months of rent. So we're paying it in advance. This is going to be a prepaid. Okay. So this is a prepaid, and it's going to be an adjustment for prepaid expense. All right. So let's look at April 10th. It says received $1,200 from customer for a 6-month service contract that began April 1st. So this is money we received in advance, right? And so if when we receive cash in advance, this is an unearned revenue. Okay. So we received cash in advance. All right, so that's just a note. All right, on the 15th, it said purchased a computer for $1,000. So 15th, what do we have to do with computers? Well, computer is an asset, and that's the type of asset we're going to have for a long time, so we're going to record depreciation. This is a type of prepaid expense. You'll remember from the lecture PowerPoint, depreciation is a type of prepaid expense. Okay, so it's a prepaid expense. Let's look at 18. We've got purchased $300 of office supplies on account. All right, so we're purchasing something. All right, so we're purchasing supplies, and remember we said supplies are an asset. So we debit supplies and credit cash, or in this instance, we have accounts payable, right? And then when we use up the supplies, that's when we're going to do record an supplies expense and then reduce that asset account, okay? So this is also a type of prepaid expense. So we're buying supplies in advance that we're going to use up later. All right. So then let's look on April 30th. It said work performed but not yet billed to customers of $500. So this is something that we've done the work, we've earned the revenue, but we haven't yet billed or collected from our customers. So this type of entry we'd have to make is going to be an adjustment to accrue the revenue. When we accrue something for revenue, it's revenue we've earned and haven't received the money for. Okay, that's when we have accounts receivable. And then the same thing for expenses. So let's look at the next April 30th. It said employees earned $600 in salaries that will be paid May 1st. So our employees have done the work. We've incurred the cost of having our employees work for us, but we haven't paid them yet. We're going to pay them later. So we have to accrue the expense, okay, and record a liability.